I guess as you're not talking about Ford, Tim, welcome.
Well, look, Ford, to me, before this announcement, and again, remember, as John pointed out, everyone's saying this is the worst case scenario that everyone was expecting. And I think in the case of Ford, the dynamics around their dividend, which was about a $3.1 billion cost to them last year, which more or less was matching where their EBIT was, slightly higher. I think it only just puts a nail in the coffin on what was already a 6% dividend yield that most people thought needed to go away, should go away, was disproportionate to what the company was doing. But as you've been talking about, the reality here for Ford is that this is a company that's underperformed GM by 30% over the last calendar year. The dynamic here is they are better positioned. Doesn't mean you're running out to buy Ford here. And in fact, I think on some level, the autos have needed this moment, and we still have a lot of math to do. It's mind-numbing. I mean, it's everything from figuring out the auto parts component, but obviously what's produced here, what parts are here, what comes over here. And I think the reality is that there's still a lot left to know. When you look at GM over the last really 3 years, I would argue, as a GM shareholder, this is one of the few names that I could say has been a disappointment in terms of the charts that I've never felt better about coming into this tariff uncertainty. And really, since Thanksgiving, the stock had priced down almost 20% going into this news. That was, as has been chronicled, not GM friendly. But at some point, $10 billion in EBIT, which they came up with last year, 75% of that looks like it could be at risk. But I think the market has really priced a lot of that in. And remember, GM hasn't been given credit, I think, in terms of its multiple in the last 2 years for being as well run and as efficient and as profitable as they've ever been in their history. So I'm going to remain glass half full and say I think there's an opportunity here. We just need to see how some of this falls out. But the stock has responded as if, 75% of EBIT could be at risk here.
So your reaction is basically as expected, but with and by the way, GM is trading at 4 times forward earnings, which is crazy. But you're long GM. You think that they're, potentially that Ford is the least impacted, but it's Ford that you expect to do the dividend cut.
I think Ford cuts the dividend. I think Ford ultimately is a story that has deserved to trade at a discount to GM, although it's more expensive. I mean, ultimately, it's not as profitable as a company. It's a company that spent the last couple of years also telling us how they were restructuring dramatically how they were producing cars and trying to be more efficient. So Ford should trade at a discount to GM. Ford ultimately, I think, is more defensive on the announcement, but I'm not sure this is a superior car company. Ultimately, the dynamics and what this means for EV, what this means for the low end, as John from Bank of America pointed out. I mean, I think there's a lot still to be consumed here. I would also say this about the Europeans. First of all, it's kind of funny that Ferrari's up on the day. So if you think about race, the ticker, this is a company that trades at 45 times PE, and it's a stock that 30% of their global sales are U.S. and 100% of it's imported. So you'd think that they would be maybe selling off, except for the fact that the people that buy Ferraris probably can spend, whatever additional amount that's going to be passed through to the customers. Exactly. Whereas with GM, they're just not going to be able to do that. Mercedes and BMW are a little different because I think they will be able to pass some on, but very clearly that's where I think you have to be focused and the global ramifications, as again has been discussed, what this means for European GDP, where the auto sector is 10% of GDP. It's a big deal, and it's part of the evolving geopolitics, even though those have been markets that have outperformed going into this news. And those stocks trade pretty well today, given the outperformance.
And just to go back to this, so, we look at Ford and we look at GM. GM, they could have 75% impact from its free cash flow. I mean, roughly speaking, in gross tariff impact. Ford's maybe more like 40%. So why do you expect then Ford to be the one to announce the dividend cut? Simply because they have the space to cut it in order to maintain or preserve margin? I mean, is that why you're calling it kind of a defensive move?
I think this is a catalyst to these headlines are a catalyst to having happened what should have happened anyway. The cost of the dividend to Ford before this news was too high anyway for a company that wasn't generating the kind of free cash flow to support paying out $3 billion on dividends. If anything, they should be putting that into some of that at least into their business.